Trading with super simple indicators like the EMA and MACD has never been this easy and profitable. As in today's video, I will be going over this super insane profitable strategy that uses the MACD indicator as well as moving average trading strategy to scalp the market. This strategy is a trading strategy for beginners who want to know what it actually feels like trading like a pro. This strategy can also be used for day trading, although it was coined to work well as a scalping strategy. It also works on Forex, stocks, and crypto. So watch till the end, as we would also be back testing this strategy to make sure it is profitable on the long run. Don't forget to like, share, and subscribe if you found this informative. Okay guys, for this strategy, we're looking at the Euro United States dollar. And we are on the 5 minutes time frame. For this strategy, let's quickly go over the conditions, as we would later be revealing the settings and indicators used by the end of the video, as well as back testing the strategy. So make sure you watch till the end to fully understand how this strategy works. Okay guys, first off, this strategy needs to be applied appropriately, as it can be a little bit tricky. But before that, let me briefly explain how this indicators work. These two lines are moving average that points towards the importance of the most recent data and information from the market. The exponential moving average is just like its name says, as it's exponential, weighting the most recent prices more than the less recent prices. And for this last indicator, it is an extremely popular indicator used in technical analysis. MACD can be used to identify aspects of a security's overall trend. Most notably, these aspects are momentum, as well as trend direction and duration. What makes it so informative is that it is actually the combination of two different types of indicators. So for this purpose, we would be combining the three indicators to get profitable outcome in the market. Now for our buy signal to be valid, we need to first have price close above both the blue and white moving average. Then we would trail our entries with the MACD. How we do that is this. Once we have price above the moving average, then we would wait till we see the MACD close below the zero line. When we have the MACD close below the zero line, we would use the candlestick that triggered the indicator close as our trigger candlestick. We would then wait till we have price close below the trigger candlestick. Once we have price close below such candlestick, we would then place trade at the peak of that candlestick and wait for our trade to trigger. So we see here we met our conditions, as we have price close above the 2 moving average, then we had to wait till the MACD moving average closed below the zero line. Now this is our candlestick to determine our entries when our condition has been met. We now waited till price action closed below the bottom of this candlestick, while we placed our entry at the top of this same candlestick. Please note that we did not open trade. We only placed a buy stop order at the peak of this candlestick. We would then wait till our trade gets triggered. And we see it happened at this point. We would now use the recent swing low as stop loss, while our take profit levels are at 3 times the risk. We can see it was a successful trade. Please note that, when price closes below both moving average, we would have to cancel our trade. Also, for some of you that would make the mistake, we said price closing below the trigger candlestick. Candlestick wick is not a valid close. Let's go over some examples to make you better understand this strategy. So this is another buy trade we would have taken. We see we met our conditions here, as we have the price above the moving average. We can also see that we got our MACD line close below the zero line at this point, and this candlestick becomes our trigger candlestick. Now we had to wait till we got the price close below the trigger candlestick at this point. When we had this, we then went ahead to place a buy stop order at the top of this trigger candlestick. Our stop loss becomes the recent swing low once our trade has been triggered. So we got our trigger at this point and recent swing low at this point. Our take profit becomes 3 times the risk. And we see it was successful. Please note that we said earlier, if price closes below the first moving average, as long as it does not close below this second moving average, we still have to remain in our trade. I hope it's well understood now. Also avoid this type of market gap, as it tends to trigger indicators that lead to bad trade. Now for our sell order to be valid, it is exactly the opposite of our buy entry. We need to first have price close below both the blue and white moving average. Then we would trail our entries with the MACD. How we do that is this: once we have price below the moving average, we would wait till we see the MACD close above the zero line. At that point we got the closing of the MACD. We would then wait for price to close above that trigger candlestick. Once we have price close above such candlestick, we would then place trade at the bottom of that trigger candlestick and wait for our trade to trigger. So we see here we met our conditions, as we have price close below the 2 moving average, then we had to wait till the MACD moving average closed above the zero line. This is our candlestick to determine our entries when our condition has been met. We now waited till price action closed above the peak of this candlestick, while we placed our entry at the bottom of this same candlestick. Please note that we did not open trade. We only placed a sell stop order at the bottom of this candlestick. We would then wait till our trade gets triggered. And we see it happened at this point. We would now use the recent swing high as stop loss, while our take profit levels are at 3 times the risk. We can see it was a successful trade. Please note that, when price closes above both moving average, we would have to cancel our trade if it is yet to be triggered. Also, for some of you that would make the mistake, we said price closing above the trigger candlestick. Candlestick wick is not a valid close. I hope the conditions were clear. Let's now go over one more example of a short trade before we back test our result. So here, we see that price has already closed below both moving average, and we had to wait till the MACD gave us the signal to look for an entry, as this tends to be our trigger candlestick. We then waited till we got our conditions met. We can see that we have price action close above our trigger candlestick at this point, while we place a sell order at the lows of this trigger candlestick. We then waited till our trade got triggered before we had to place our stop loss at recent swing high. Then take profit levels are at 3 times the risk. And we see we were successful. Now, for the settings we applied, let us clear the chart for this. For the first indicator, bring up the indicator panel. Then search for the MACD crossover. This one right here by H. Potter. And for the second indicator, let's search for the moving average exponential, or you could easily write the EMA. We would be using 2 of this to better identify how strong the trend is. Now for the settings, double-click on the MACD to bring up the settings panel. On the style, I want you to untick the bar color, also untick the signal. Then change this MACD to white and increase the opacity. Also change the level to white, then leave the opacity at 50. Then at last, change to a straight line and click on the OK button. And for the EMA, double-click on the moving average on the input, change the length to 79 and click on the OK button. For the second EMA, double-click on it as well on the input, change the length to 320, then move over to the style and change this to white. Click OK when you are done. And that's all for this strategy. Please make sure you stick to the rules if you must trade this strategy. Now we will be back testing our result with an account size of $1,000, as we risk 1% of account size on each trade, while we back test 200 trades. Let's dive into it. Guys, so we just finished the back testing for this strategy. And we can see that the win rate is not really impressive, but before you avoid the trade just yet, let me show you an important fact about this trade. We had a win rate of 37%, which is poor, having won 75 and lost 125, but we also bagged 100% profit. And I found those trade setups within 4 months. Now this strategy would trigger a lot of losses and can be really disturbing, especially if you just started when the strategy is really not doing well. Because looking at the profit factor, we had 10 losses in a row against 3 wins in a row. But on the brighter side, this is a long-term profitable strategy that can green up your account in months. So overall, I'm definitely happy with the result. Okay traders, let's now compare the strategy to some other strategy back-tested on this channel. In terms of return on investment, this strategy is worth trying as it made decent amount of return. 100% win rate in 4 months is better than most strategy you would likely get out there. You should probably test this strategy out if you want monthly profits from the market, as the risk to reward is totally amazing at 1:3, which is also good if you consider risk management when trading. If we take a look at the win rate, which is probably one of the most important metrics, newbie can sit out on this, let the pros who can deal with some account drawdown work with this strategy. So yeah, traders, definitely give this strategy a try, and make sure you do the proper back testing and forward testing before trading live. By the way, if you have any strategy you would like to try out, please let us know on the comment section. Also, feel free to check out my other videos on our channel. I have playlists with different strategies and indicators that will definitely make you a profitable trader. All I ask for in return is to give this video a big thumbs up and subscribe to the channel, as it is absolutely free. Thanks for watching, and see you in the next one.